Hey YouTube, so All Good asked me pick, how do I find stocks to invest in? And I am a very keep it simple, stupid kind of guy. Now, most people will say, well, if you're that way, you should invest in ETFs and ETFs only. And I partially agree. Um, but I like to invest for dividends. There's no hiding that. And I'm going to share with you how I go through and look at a stock. And it's very rudimentary. I sometimes I'll read, investor presentations, whatever you call them, 10Qs or damn it, y'all know what I'm saying. Um, Earnings calls. I'll read through an earnings call every once in a while. But for the most part, like for instance, right here, I'll go on Seeking Alpha, and this is something I just bought last week. I only bought 10 shares, but the first thing I do is I look at the 1 year performance chart, and this is what I actually like to see. I like to see sideways movement because if I'm going to invest and I'm going to keep buying throughout the year, this is the kind of price movement that I want to see. I don't want to see big spikes and big drops, even though once I switch to the other ones, you'll see that. It's like I'll go to the max, and you'll see this big drop from 2018 till now. And, I got to ask myself, why? Well, it was probably overvalued at this time. And it was probably paying, a 3% dividend. And what I'll look at is, are they making money? And right now, earnings per share forward is $3.94 earnings per share. I'll look at the dividend yield. Right now, it's yielding 7.56%. Next, I'll look at ratings, and I'll just look at the sell side rating real quick, and it'll show 3 analysts have it as a buy, 1 as a hold, 1 as an underperform, and it has an average price target of 43.05. And then what I like to do is go to key data. And I usually won't look at the financials and the cash flow and the balance sheet. I'll just look at overview. And what I like to see here, I like to see this. This is one thing. I like to see a 52-week performance that is negative. I like to see negative. And I gotta say that I am a very I like buying stocks that are going down. I don't know why. Maybe it's the frugalness in me or the cheapness in me. I hate buying stocks on the way up, and that's kind of why I started a 10 share position in BTI, is because Altria that I own has run up in this past month or so, and I don't like buying stocks when they're running up. So I got into BTI, and the next thing I'll look at is price to book. If you can get under 1, that's awesome. But I will look at their profitability, and right here, this is ridiculous. 82.68% gross profit margin, and they're able to net out 24.6 after everything's said and done. I like to look at their revenue. They're bringing in $31.78 billion of revenue, and that is growing at about a 5% clip. Then I will look at debt, and their debt is high. There's no doubt about it. But honestly, there isn't very many dividend-paying companies out there with a bunch of debt anyway. and it doesn't look like we're getting out of it anytime soon. Then I will look at dividends, and then I'll look at their growth rate, 3.25%. They're paying 7.56% dividend yield. That is pretty good. And this is deceiving for this company. Dividend growth at 2 years. If you go to the dividend history, and it looks like they cut, but they really didn't. If you go to all, if you look before here, it looks like they cut it, but they used to pay a semi-annual dividend, and then they did a split, and now they're doing, shortly after that, now they're doing quarterly payments. And it looks like it varies a little bit. They've been stuck at 0.6745 cents a share. I will look at value, and it's a non-GAAP forward PE of 9. I like to see that. I like to see PEs under 10, personally. I will look at growth, and the revenue growth year over year is 5.23%, and revenue growth forward 12 months, meaning they're expected to grow revenue 7.39%. And then their forward earnings per share diluted growth, earnings per share growth forward is 10.9%. So they are a cash machine, is from what I am seeing. Profitability, EBITDA margin, and gross profit margins very high. And that's about it. I will look at if they've reported earnings. I will look at if they've beat or missed. You actually can find that here in earnings. And it doesn't show. This is not an American company, so it might be a little weird for some things. Here we go. Consensus EPS estimates. So analysts are predicting some growth, and yeah, so that's just, I mean, a very simple way. I like to look at PE. They're not showing a PE here, but I like to see a PE under 10. I like to see a high yield, and I like to see a flat, for, going back almost all year, a flat share price, so that I can accumulate shares and keep accumulating shares at this 7.56 yield or close to it. Okay, so that's all I got. Sorry that it's not anything special. It's just it's this company that I think is a cash cow, just like Altria Group, and that's how I do a quick overview of the company. And if you have any other questions, leave them down below, and I'll probably make a video of it if I have an answer. All right, we'll talk to you later, guys. Thanks. Bye-bye.